Time for our first video ever on Datadog, ticker symbol DDOG. It comes after this company reported their Q2 earnings before the bell today. We'll take a look at the revenues, the profits. We'll take a look at the all-important guidance for not only the third quarter, we essentially got fourth quarter guidance and full year outlook for the full year over at Datadog. We'll take a look at that. We'll see how that lines up with analyst expectations, at least on that revenue side. We'll take a look at this company's strategy. They're going to roll up other technology firms into their business model, certainly going to need plenty of cash or at least a stock that has a rich valuation. We've got to talk about that valuation here in a moment. We'll go through all the numbers and then we'll look at this from a technical perspective, actually setting up like a lot of stocks that we're looking at. And this one's actually really predictable, at least over the last couple of months. I think there's some great opportunities here, at least from a technical perspective. Now, Datadog over the last year, down just 4%. That's not bad. Year to date though, down about 32% like most stocks. Now, Q2 earnings came in after the bell. We had $406 million. That was just 73% year over year revenue growth. That beat expectations by about $24 million. I tell you what, when your market cap is 35 billion, you have very few earnings, and what you do have contributes to a massive PE, well over 150. But when you have over 70% revenue growth rate, well, I tell you what, Wall Street's willing to pay a premium for that. We did get third quarter outlook and guidance, revenue coming in between 410 and 414. So we'll talk about the quarter here in a moment, where we just did $406 million sequentially. Over in the next quarter, we should do 410 to 414. Wall Street, quite frankly, was expecting right on the dot of that 410. So in a lot of ways, Datadog essentially kind of meeting analyst expectations, at least for that Q3 revenue. Now, they beat expectations by quite a bit in the most recent quarter. In fact, meeting the high estimate of $406 million. So maybe there's some investors believing that Datadog will be able to come in well over and above 410. Certainly possible. However, they also gave us full year guidance as well. Revenue coming in between $1.61 and $1.63 billion. I think that has investors bummed out to a certain degree, because if you take these next two quarters expectations of about $880 million and you add it to our $770 million worth of revenue that we had through the first 6 months, it gets you to a number very close to this, essentially meaning Datadog is meeting the expectations of Wall Street for the next couple of quarters. And that will represent over 50% growth and nearly 45% growth over the next Q3 and Q4. But sometimes when you have a massive valuation of 35 billion on this one and just 1.6 billion to 1.63 billion on that revenue side, this stock trades at a massive premium to the vast majority of stocks, even after the pretty large decline from the highs of over $200 per share. Investors, quite frankly, might want more than that. Now, looking out into the future with Datadog, which I quite frankly really think you need to do when it comes to this valuation, you're growing at that 30% clip. At least that's what Wall Street is expecting. That means you're doubling this business basically every 2.5 years. And one way they are doubling the business is they continue to do acquisitions over at Datadog. Back in May, they agreed to acquire HDiv. Now, the financial terms of the deal were not disclosed, but you can typically dive into cash flows and get a general idea as long as the company hasn't completed a lot of other acquisitions during the most recent quarter. They did announce today on August 4th the fact that they are going to acquire Secret, which is an API company, again, for terms that are not disclosed. But when we go through these financials, you'll get a general idea how much they pay for these firms. Now, the revenue in the most recent quarter we talked about came in basically at the high end of guidance. When I talk about revenue estimates, it's kind of taken an average between the low and the high. Datadog came right at the high at $406 million, up huge. Last year, you were at just $233 million. Now, one of the reasons why this stock is on our radar, and quite frankly, in a lot of portfolios out there as well, is look at the cost of revenue, just $81 million to generate this 406. Those are tech-like margins that you got to love. That means off of $406 million worth of revenue, we have gross profit of $324 million. That leaves you so much money to play with when it comes to expenses like R&D, which came in at 177, up dramatically over last year where you were closer to 95 million. You also have sales and marketing went from 70 million up to 115. I tell you what, when your sales grow this much, you'd expect that marketing budget to be boosted as well from 70 to 115. And then finally, where all the money gets bled out of a company is usually in the general and administrative, things like private jets and parties, went from 21 up to about 35. Not quite a dramatic increase, but pretty big from a percentage basis. Total operating expenses in the most recent quarter coming in at $327 million. Now, I tell you what, you take this 324 in revenue and you minus off 327, guys, we are basically at a break even. And then when you factor in these costs, over 80 million, in fact, nearly $83 million worth of the $327 million worth of operating expenses come in the form of stock-based compensation. So while we're reading these as a dollar figure, it is coming in the form of stock-based compensation to the tune of $83 million in a quarter. Now, that is good from a cash perspective, bad from a dilution perspective. Keeps pressure on the stock as employees that are rewarded with shares tend to sell them so they can go buy their Mercedes and the Rolex that they've had their eye on. Now, we do run from basically a break even, and I like that. And look, when you look over the last 6 months, tell you what, this company had a tremendous first quarter because they still have $7.2 million worth of positive operating income through 6 months after losing $3.1 million in this most recent quarter. Folks, this is break even. Now, is break even good enough for 140 PE and a 30 times price to sales? You have to I can't answer that question for you. I can answer that question for myself, but everybody has different types of risk tolerances. You also see the fact that the diluted number of shares outstanding went from 308 up to 314. Expect that to continue in that direction, okay? They're compensating the employees tremendously through the use of stock-based compensation. And I'll show you here in a minute, this company probably is going to have to continue to raise money, believe it or not. Now, we still have $1.5 billion, in excess of probably close to $1.7 billion worth of cash, almost no liabilities to really even speak of. Another reason why you like these types of stocks, if shareholders give them a pass on massive stock-based compensation and give them a pass on minuscule profits to the bottom line, but they focus on things like cash flow and the balance sheet and the total addressable market, well, stocks like this can certainly perform very, very well. Now, in the most recent quarter, from a cash flow perspective, we pull down that $4.8 million loss. We get to add back in things like $83 million worth of stock-based compensation. You also had depreciation coming in at close to $8 million in the quarter. That means net cash provided by the operating activity sitting right at $73 million. Last year, you're at 51. For the last 6 months, you're at 220. Start annualizing that figure out and then factor that into the valuation. While it's still astronomically high, it can start to make maybe a little bit more sense. Now, from an investing activity, I told you about the different acquisitions that they closed. Now, they announced this HDiv one back in May. It was expected to close before Q3 2022. I think there's some evidence that they closed on it in this quarter. You have cash paid for acquisitions, net of cash acquired, sitting right at $34.7 million. Last year, you did over $188 million worth of acquisitions in the quarter. You see for the full year, roughly $39 million of acquisitions. Again, almost 35 of it coming in this most recent quarter. You did $200 million, so they were far more active last year. Quite frankly, I think the market is probably even better for these types of deals, but it could be that companies, based on the depressed valuations we're seeing across the board, maybe companies are less wanting to sell in this market, whereas last year when everybody's valuation was really high, there was probably more companies willing to sell to Datadog. I'd like to see them maintain aggressiveness on this M&A, considering you had a big pullback in valuations, certainly in the public markets, certainly in the private markets. You're going to see a similar type of thing. Not much from the financing side over at this company. So they spend the vast majority of this operating cash went into these investing activities. And quite frankly, that's what you want when it comes to Datadog. Now, from a technical perspective, there are some insane candles on this one, up over $120 per share, $180 per share. I don't think in today's market climate, and that can change very quickly, I don't think we're going back to these levels up here anytime soon with a stock like this. Now, from a technical perspective, Datadog is starting to trade in a sideways consolidation pattern, starting down here at about $79 per share and kind of topping out almost exactly where the stock is right now at $111 per share. So I would expect in the coming days for this rally that we've been on with Datadog down here from $85 per share. I mean, this was literally just a couple of weeks ago. We've gone from 85 to 111 with all green candles. Whenever you see that many green candles in a row and the fundamentals not change a lot over at Datadog, well, I think there's a high probability we'll see some red candles show up with this stock and probably a lot of stocks that we're looking at right now. You get some red candles coming here, a technically perfect pullback would maintain kind of these higher sets of lows that we're making. We could stop out here at about $90 per share. Quite frankly, if I wanted to get Datadog, I want to try to get it in this sideways consolidation from 80 to 110, and I'd like to get it on the low end. So I'd actually start buying this one down here about $90, full expecting that maybe, hey, look, it's maybe going to go down here to 80. So if I wanted 10 shares of this, I might just buy one here, wait a little bit, maybe it goes down a little bit more, maybe I buy 2 shares there, goes down a little bit more, maybe I buy 4 or 5 down here. Understanding that if we break through this $80 level over at Datadog, and that's certainly possible, especially from a macroeconomic perspective, you break below 80 and it's look out deep below. So personally, I would absolutely, it doesn't matter what account and what your goals are with Datadog, I would absolutely have a stop loss in this one down on the previous lows that we made back here, back in May of 2021, down here at about $70 per share. You break through that level, there's nothing holding this stock back, going down to about $50 per share. Certainly from a valuation perspective, absolutely makes a lot more sense down here at 50. So it wouldn't surprise me if it comes here. But if the market gives a stock like this the leeway to scale up these earnings, you start growing 30% quarter after quarter, year after year, you're doubling your business very, very quickly. And all of a sudden that valuation over at Datadog certainly makes a lot more sense. And maybe these acquisitions roll up nicely and you've got a nice company. My opinion right now, still a little too richly valued. And there's other stocks that I like a little bit better than this, but certainly from a growth portfolio perspective, I wouldn't blame any investor taking small shots at this one. I would wait from a technical perspective. You should get a better opportunity in the coming weeks ahead. That was Datadog. Hopefully you guys enjoyed today's video. Lots more coming. Good luck with your investments.